This is the only strategy you need when it comes to trading gold. Now, most of you trade gold during wrong hours. Most of you trade gold anytime you open your phone. Most of you trade gold whenever you open your system. But you forget that when it comes to trading gold, gold requires precision and patience. You can never be profitable in gold if you are actually a trader that chases the markets. Now, some of the session you would want to trade gold to make more money from a London session and New York session. Anything Asian session, count me out. Do you understand? Remember, every single information I give you guys on here are informations that I've used over the years. Do you understand? These are informations I've used over the years, and I would never give you an information that I haven't tried that did not work for me. Now, I could easily tell you where gold would end up by December 2025. I could easily tell you where gold will be by November 2025. Not because I am predicting the market, but because if I go to the monthly time frame, I can put in one or two strategies, look out for my supply zones, my demand zones, and tell you, okay, gold will head to this point. If there's a fundamental news that favors the USD, or gold will head to this point if there's a fundamental news that weakens the USD. Remember, from my previous video, how to trade gold like a pro, I exposed the law of information. If you've not watched the video, please go back and watch that video before watching this video. Because in this video, we're going to be diving into more technical aspects of gold. Now, remember what I said, starting from the 4-hour time frame, okay? Starting from the 4-hour time frame. When it comes to trading gold, you always want to pay attention to where the big move started from. This is one of the most underrated strategies that nobody talks about. When it comes to trading gold, you always want to pay attention to where the big move started from. That should be your point of interest. Do you understand? That should be what? Your POI. Take notes. Now, on this chart, where can you deduce that the point of interest is at this point here? Right? This is where your point of interest is. Why is this point your point of interest? Because this is where the big move started from. Another position, you move to the next point. Now, another point you want to pay attention to is where? At this point here. This is also your point of interest. Why? Because this is where the other big move started from, and immediately the market came back into that zone, we saw another push. Meaning, as this market is approaching our point of interest, if the market comes into this zone, we want to wait for what? We want to wait for a sudden demand into the market, or we want to watch out for a huge spike to the upside. Remember what I said, when you're trading gold, you always want to pay attention to what? To wicks. Wicks are very important when it comes to gold trading, because wick will actually tell you how traders are coming into this trade. Are they coming in aggressively? Are they coming in cautiously? First, always make sure you're trading gold during the London and what? New York session. Anything during the Asian session, you can actually just trade pairs that are Japanese yen and so on and so forth. If you've actually watched my video, or I will make a video on how to mark key levels during Asian session, so that you will know what pairs to focus on for those of you that like to wake up in the night and trade. All right? Good. Now, like I said, since you've already paid attention here, meaning if gold should come into this zone where the big move started from, this is trying to tell us that what? That we have big players around this zone that injected money into the market, which is why immediately the market was selling. As the market got to this zone, we saw a huge reversal to the upside. Now, let's go forward. Let's check some of those big moves that have influenced charts in the past. All right. Now, pay attention to this level here. Pay attention to this level here. Pay attention to this level here. Can you see what happened here? Can you see what happened at this point here? You can clearly see that this was where the big move started from. Then the market came back to test inside this big move. Then we saw a huge spike to the upside. Now, immediately the market pushed to the upside, the market continued pushing. Then we started seeing wick. Now, immediately you spot 3 or more wick at the top of gold, meaning at the resistance level or close to a supply zone, you should start closing your buy position, because once you've spotted the first week, they are giving you a warning. Second week, traders are taking profits. Third week, you should start closing those positions, because likely there might be a what? There might be a reversal. Now, the market start pushing back down. Now, once the market starts selling back down, you're not in a rush to buy back up. You're waiting for that market to come where? Your key POI. You're waiting for that market to locate what? Your key POI. Now, your key POI is where the big move started. Remember, this is on the 4-hour time frame. I will still make a video on how to trade gold on lower time frame. This is your 4-hour time frame. This time frame is only for traders that have mastered patience and have precision when it comes to trading. You should only be trading gold on the higher time frame if you've already found your edge. If you've not found your edge, whenever you want to trade gold, just go to the lower time frame, because that way you're risking less, and if the market ends up hitting your profit, you'll make more from the market. But if you come to bigger time frame like 1 hour, 4 hour, chances of you losing your money is higher, because it requires enough patience, and not everybody have that patience. Because some people, when this market starts selling, they will buy back up. They won't wait for this market to confidently sell properly until it gets into our POI zone, which is our point of interest. Remember, your point of interest is different from what? Your key level. Key levels are levels where you're looking to buy or sell the market, levels where you're expecting the market to react. Point of interest are those points on the chart where a big move to the upside or to the downside happen, and you're looking to see what would happen if the market gets to that point. That level is actually what? Your point of interest. Please take note. Now, we've actually seen that this is our point of interest, and immediately the market came into the point of interest. What happened? Can you see what happened? The market held that zone, and we saw a huge push again to the upside. Do you understand? Now, let's move back again so you still see. Now, moving back. All right? Moving back here. Pay attention to this level here. When it comes to gold, if you've not mastered supply and demand, you've not mastered how to spot your magnet zone, although I've taught all my students. Remember, if you don't want to miss my mentorship, make sure you make payments. If you miss it, it's on you. Now, once you've actually found your point of interest, remember, point of interest, POI. What is your point of interest when trading gold? That candle or that direction or that level where the big move started from. That is your point of interest. Please take note. That is your point of interest. Now, at this point here, if we move to the 1 hour time frame, right? If we move to the 1 hour time frame, you will clearly get a clear explanation of what we're talking about. This is it here. Let's move forward so you can actually see what I'm talking about. Good. We're approaching it. This is on the 4 hour. All right. This is the 1 hour. Good. You can see it. This is the point where the push to the upside started. And that point is referred to as what? Our POI. Now let's go back to the 4 hour. Sometimes the reason why you move to the smaller time frame is to refine your entry. Now, whenever you're trading any pair, not just gold, whenever you're trading any pair, and you notice on the 4 hour, 1 hour, you're just seeing one big green candle or one big red candle, a bullish or a bearish candle, and you don't know what to do, you don't want to buy, you don't want to sell because the SL is a bit big, what you should do is to scale down to the smaller time frame, refine your analysis. When you refine your analysis, you're good to go. All right? Good. Now, let's come back to this point. Now, you know that this is your point of interest. As your point of interest, what do? You mark that level and you're waiting for gold to come back. We've actually spotted how many points of interest now? 1. See the second one here. 2. And this is what? This is the third and fourth one. 3 and 4. And you can see all the point of interest that was spotted, the market played according to that level. Meaning, even this YouTube video of how to spot point of interest in order to benefit more when trading gold can even keep you profitable. All you need when it comes to trading gold is to wait for New York, London session, then at the same time have patience. Once you have patience, you will make a lot of money from gold. The reason why most people don't make money is because they are always fast. They always want to buy, they always want to sell. Then have a risk threshold. This is the only strategy you need to become a profitable trader. So long as you've watched my previous video, how to trade gold like a pro, you've watched the only strategy you need, point of interest, you've learned all this, I promise you, you will be a very good trader. Please take note. Now, we've actually marked 4 points, all right? Now, remember, we've actually marked 4 points of interest. One thing you need in order to be profitable is to what? Respect risk management. I always tell you guys this because every single information I give in this video are ways in which I approach the market. Now, if you want to approach the market that same way, always make sure you have a risk threshold. Remember, this is the 4-hour and the 1-hour time frame. We're still going to scale down to our smaller time frames if we are looking for entry. Now, in the next video, I will teach you guys how to mark or how to trade gold on lower time frame. We've talked how to trade gold like a pro, the only strategy you need, which is the key POI strategy. Now, let's see one more example, then call it a day, all right? Now, here. Where did this sell started from? Where did the buy start from this point here? Can you see? This is where the buy started from, right? This whole level. Now, on this whole level, did the market tap into it? No. So not every POI will be tested. I want you guys to also remember that because it's impossible for you to take 10 trades and 10 of them tap your targets. Except you are actually an aggressive trader that you don't wait for the market to tap into your target, rush into the market. Please take note and remember, not every POI will be tested, but at least the ones that were tested, utilize them properly. And once you enter those trades, right, your SL should always be below that POI. Your SL should be what? Below that POI. Remember, this is the 4-hour and 1-hour time frame. If you're using this same strategy on your smaller time frame, you know that you'll be having what? A smaller SL. Please take notes. This is the only strategy you need to become a profitable trader in gold. If you love analysis like this, you want to get more signals from me, you want to watch my daily outlook, you want to see how I trade the Forex market, you want to learn from me, please do well to join my Telegram channel. I share free signals there, free education. And for those of you that also want to learn from me because you love the way I teach, you'll also find the information there. I remain Oko Anthony Uche, also known as Tony Sniper. Peace.